Hey everyone, welcome back to Corporate Decoder, the place where we decode the language of business. Today we're diving into RLI Corp's latest quarterly report, but don't worry, it won't be as dry as a saltine cracker, or at least I'll try my best to not make it so. This report shows how RLI Corp, a specialty insurance company, performed in the first 3 months of this year. We're talking about premiums they earned, how their investments did, and whether they made a profit or loss. Buckle up, because we are going in. This is a Form 10-Q, which is a quarterly report that public companies in the US file with the Securities and Exchange Commission, the SEC. Think of it as a checkup to let investors know how the company is doing. This one is for the period ended March 31, 2004, the period ended. March 31/25. As of mid-April, REI had about 91.8 million shares of common stock outstanding. This number is important because it's used to calculate earnings per share. Alright, time to talk numbers, and in order. So there we go. They're condensed consolidated statements of earnings and comprehensive earnings. This report is basically a profit and loss that for the first 3 months of 2025, net premiums earned were around $398 million from last year. Think of premiums as the price customers pay for insurance policies. It's like the revenue for an insurance company, and with that, the losses and settlement expenses, which are the costs associated with claims, went up to $177 million. Their basic net earnings per share, that's the profit allocated to each share of stock, landed at 69 cents per share, or 0.69. Last year it was $1.50, so that's about half the profit per share. Let's peek at RLI's condensed consolidated balance sheet. So the quick health check of the company. Total assets as of March 31, 2025 were approximately $5.7 billion. That's more than the almost $5.6 billion they had at the end of last year. This basically tells us everything the company owns. On the other side, total liabilities, which is everything they owe, sums up to $41 billion. And finally, for a quick view, total shareholders' equity is $1.6 billion. It's the owner's share in the company's assets after taking into account the liabilities. The cash flow statement tells us how cash moves in and out of the company. It's divided into 3 sections: operating, investing, and financing. Net cash from operating activities, which is from their insurance business, was $103 million. Very nice flow. But then for investing activities, which involves buying and selling investments, was negative at about $103 million. This part is a bit technical, but it has important details about how RLI prepares its financial statements. For example, how they estimate unpaid losses, how they value their investments, and how reinsurance affects their numbers. I know it might not sound exciting, but it's crucial for really understanding the financials. It's worth to point out a future guidance being designed to increase transparency about income tax information. They're still figuring out how to estimate it. Reinsurance for insurance companies. They use reinsurance to protect themselves from very large claims. We can also see that for uncollectible reinsurance amounts, the allowances were $17 million. The company monitors the financial health of its reinsurers, which are the ones that provide them insurance. They reported goodwill, what they expect that would not fall from the sky, for $46 million. Goodwill typically appears when one company buys another, and it is the value that exceeds the price of tangible assets. They also mentioned they did not have any triggers to test this assumption, so that's reassuring. Earnings per share, or EPS, tells you how much money the company makes per share of stock. We have the basic and diluted EPS, which includes potential shares from stock options and so on, is usually a bit lower. Comprehensive earnings looks at the whole picture, including things like unrealized gains and losses from investments. This section describes how RLI determines the fair value of its assets, which impacts how the balance sheet is calculated. We have the levels 1, 2, and 3 with their respective rankings. In here, this company is just selling a lot of securities. Here you can see how much fixed income, which is mainly government and corporate bonds, compared to equity that they have. They mark these as 1, 2, or 3 depending on the source. These numbers are big, for example, 3.4 billion. These are estimates of how much they will need to pay in the future. Their tax rate was %119.6, a little under the expected one. Employees get paid in part with stocks, how options, activity, and RSUs operate. RLI has 3 main segments: casualty, property, and surety, and here we can see how much each segment earned underwriting income. That said, their CODM, or Chief Operating Decision Maker, measures by segment. You guessed it, underwriting income. Mine safety disclosures, thankfully not applicable, so what's the story here? RLI Corp is navigating a tricky market. Their premium are increasing in casualty, but they are decreasing in property due to increased competition. They have very good cash flow. Net investment income increased, but was overshadowed by equity losses. Looking ahead, RLI seems to be in a good position. I just hope that the market conditions in the equity part improves. If you made it so far, you are a certified corporate decoder agent. Don't forget to leave your like and hit that subscribe button.